Tesla just made a $25 billion bet. The market look at the latest numbers and sees a problem. Cash went negative, about $1.1 billion negative. Tesla looks at the same numbers and sees five future businesses. In the second quarter, Tesla delivered about 480,000 vehicles. That is a record for that period ever. Revenue came in at about 28.2 billion. That is 26% up from last year. And still, free cash flow went negative. The tension is the whole story of this video. If you're watching this, it means something very important. You're not just looking at Tesla, a car company today. You're curious about what Tesla can become. Investing is always about the future. When you buy a stock, you're not paying for what the company was. You're paying for what the company can become. Keep that in mind as we go through these numbers. On the surface, Tesla is doing better than ever. It delivered more than 480,000 vehicles in the second quarter. That is a record for a second quarter, up 25% from the same time last year. Revenue hit 28.2 billion, but spending on factories, robots, and AI jumped hard. Capital spending reached about 5.8 billion in just one quarter. And remember, it's 142% up from the same time last year. That big spending is what pushed the free cash flow into negative for the first time in more than 2 years. The day to day business is still healthy. The cash problem came almost entirely from the decision to spend more. Tesla chose investment over short term cash. The most important number in the quarter was not the delivery numbers, it was the $5.8 billion of capital spent. In 2025, Tesla spent about $8.5 billion for the entire year. In 2026, the company says it will spend close to 25 billion. That's almost three times higher. Management has said that this high spending will continue for the next 2 or 3 years. You only spend like this if you believe the next business is going to be much larger than the business of today. So, what is Tesla funding with all this money? I say five futures: Robotaxi, Optimus, the humanoid robot, AI computers and inferencing systems, energy storage, and deeper control into its own manufacturing business. The car business is no longer the final product. It is the cash engine, it is the data engine, it's the factory engine for everything else. That is the big shift. A lot of time and effort goes into researching and making these videos. If you're finding this useful, please take a second to like the video, subscribe to the channel, and share it with someone who also may find this useful. That small support really helps us to keep improving and bringing you clearer, more detailed analysis in the future. Thank you. Let's now continue. Let's start with Robotaxi. The old model was simple. You sell a car once, you collect the money once. The new model is a bit different. Here, the car becomes a machine that can earn money again and again. Cybercab production has already started at the Texas factory. Tesla lists their capacity to more than 125,000 units per year. This is the first time a clear capacity number has been shared. Robotaxi service is now live in 7 cities across the US. This is no longer a talk on slides, but real hardware is actually being built. Now, think about it. If Robotaxi works at scale, Tesla stops behaving like a car company. Let me explain to you some simple math. Suppose a Cybercab generates $55 per day of net income once it's running well. Now, this translates to about $20,000 per year. If you multiply the full capacity, 125,000 Cybercabs, multiply $20,000, that translates to $2.5 billion of annual profit just from that one factory. Now, if the market pays 75 times those earnings, that translates to about $187 billion of market value for the company. Tesla has roughly 3.5 billion outstanding shares. So $187 translates per share value to about $50 to $55 of extra potential upside just from Texas CyberCab capacity alone. Let that sink in. Now, Optimus. Optimus is not just a cool robot story, it's a labor story. Labor is one of the biggest markets in the world. Tesla wants to build physical AI that can actually do useful work. The path is slow and careful. First, the robots work inside Tesla factories. Then they move to warehouses. Then to a wider business use case. Only later they become a full labor platform. Elon has been honest about this. He said production will be extremely slow at first. This is not like making a car. There are about 10,000 different parts in it. Early robots will stay inside Tesla, they will collect training data and learn from it. Now, hear me out. Here's a simple math for Optimus. Tesla is building capacity of about 1 million robots a year in Fremont and $10 million a year in Texas. Together, that's 11 million robots when full production capacity is utilized. Let's keep the daily numbers on the conservative side. Suppose one robot generates $20 of net income per day once it's useful. That's about $7,300 per year for one robot. At 11 million robots, that's roughly $80 billion a year of net profit. If you give 75 times multiple, that becomes about $6 trillion of potential value upside. Now, using the outstanding share calculation, that translates to about one $1,700 per share of theoretical upside if those numbers were ever truly realized. These are big numbers, but there are a lot of ifs. But this is why people say Optimus could eventually be worth more than the current business today. Look at what happened to the Fremont factory. The Model S and the Model X production lines are gone. They have been fully taken out. Tesla is installing the first production lines for Optimus in the same place where they used to produce Model S and Model X. Production is expected to start later in the year. When the company removes its premium car lines and make rooms for robots, the strategy is no longer just words. It's real money and real factories. AI infrastructure is quite the heavy spender. Tesla more than doubles its on-site computing power in the first half of 2026. The new codex systems are being built to train both self-driving car and to train the robotic software. More self-driving needs more computers. More robots also need more computers. That is why the capital spending has become so large. And let's not forget the energy. Energy is quite compounder. Energy storage came back into growth in the second quarter. It was the second best quarter for deployments and a record on a 12-month basis. In a world where AI data centers need steady power, energy storage stops being a side product. It starts looking like an important infrastructure. AI needs computers. Computers need power, and power needs storage. Tesla is not only building cars. In Texas, Cybercab production has already started. In Fremont, Optimus lines are going in. In Nevada, a semi and battery work continues. Mega factories are scaling energy storage. Tesla is trying to control more of the full stack than any normal car company has ever tried. Optimus is not a simple yes or no. It can fail and stay a research project. It can succeed in a medium way by working inside Tesla factories and saving them costs. Or it can become a true labor platform that other companies can also use. Right now, in 2026, we are still in the foundational phase, not the big revenue phase. The cautious view is fair. Profit margins are under pressure. Free cash flow went negative by 1.1 billion. Many big projects are running at the same time. Competition is real. And if you look at Tesla only as a car company, the price looks high. A serious positive case has to face these points. It cannot be ignored. Here is the whole debate in one simple frame. If you see Tesla only as a traditional car company, the current price is hard to justify. It looks expensive. If you see Tesla as an AI robotics company that is still early, the same looks very attractive. It looks cheap for the future it's trying to build. Your decision depends on which Tesla you believe in when you're buying it. If you do not believe in self-driving and robotic future of Tesla, Tesla is too expensive when measured as a normal car company. In that case, the stock is probably not for you. But if you believe in that future, then the same company can look very cheap for what it's trying to build. For this big spending plan to work, several things need to go right. Optimus has to become useful, not just impressive. Robotaxi has to grow in a safe and economical way. Energy storage has to keep growing. The AI systems have to make the products better. And the car business has to stay strong enough to fund everything. Tesla is no longer trying to win only the electric vehicle race. It is trying to build a new kind of company, one where cars, self driving, robots, energy, and AI all support each other. The real question is no longer can Tesla sell more cars? The real question is can Tesla build and manufacture intelligence? The real story is not the cash that went negative. The $25 billion cash spin is actually the story. Tesla is trying something that no other major car company has ever tried at this size. Now, if you're still watching this video, it only means that you're interested in the future version of Tesla. Investing is always forward looking. That is the bet Tesla is trying to make. And if this breakdown analysis helped you in any way, do subscribe us and follow us on X at Smart Tech Money. Thank you, and I will see you in the next one.